to S&P Global Pitch. My name is Sendra Dorcé. I am the co-founder and co-moderator. Today, we will bring you some companies with ideas and disruption to transform the world. And the audience, we have investors, and we hope that this synergy will be quite beneficial to all. Welcome to S&P Global Pitch Investor Chat. I have with me today a dear friend and a fellow investor and business leader, Mr. Oliver Lovat, who I've known from my days of business school, and him and I have, we went to China together, so we have quite a bit of history, but I will tell you a little bit more about Oliver. He is the founder and current managing director of Denstone Real Estate Asset Management, and by training, he's a chartered surveyor, and he is also a faculty and lecturer on strategic marketing at Cass Business School, City University of London, and has addressed conferences including the WGES, the G2E, the ICE, the GIGSE. His writing and contributions have been featured in public publications such as Gambling Insider, the Investment Property Forum Journal, the Global Gaming Business, Gaming America, and in national and international newspapers. Oliver holds a BA in Political and International Relations, an MSc in Real Estate Investment from the University of Reading, and an MBA from Cass Business School in London with a focus on strategy and finance. He is published as an academic for academic work and strategic competitors' advantage in the behavior and attitude of millennials. What fantastic topics. So I would like, and also he had been living in London for 15 years, but now currently lives in Nevada, more specifically Las Vegas. So I want to say welcome to Oliver, and it is such a pleasure to welcome you on this investor chat. So would you like to fill me in on what I've missed? Because of course, it's always easy to read the bios scripted, but tell us, I would like you to tell the audience what you would like most them to keep in mind while you and I are talking.
First of all, thank you, Sendra, for having me on. It's a real pleasure to see you again. And I like to say it's wonderful to be in the US, the same place as you again, having spent so much time in the UK together. Your introduction sounds great, an awful lot of letters, but the real story is an awful lot less exciting. My background was originally in real estate development back in the UK, building residential, moving to commercial real estate and asset management, and then working in investment and development, partly on my own account, but also on behalf of other clients as well. So, and about 10 years ago, over 10 years ago, when we did our MBA, my thesis was looking at casinos in Las Vegas because they were very interesting pieces of real estate. There's nothing like Las Vegas Casino Resort at the time, and that model that we saw in Las Vegas 25 years ago has now become the anchor for the likes of Macau, Dubai, and many other leisure resorts. What interested me about those assets were A, the people, B, the financing, and C, how they operated. Because ultimately within a casino resort, and if you know Las Vegas or Macau and know the strip at all, you've got, I think it's like 15 of the largest 25 hotels in North America, all sitting on the same street, selling the same product at the same time, in the same place, to the same people, at the same price. A roulette wheel is the same roulette wheel, a blackjack table is the same blackjack table. So how do you drive competitive advantage? How do you drive customers to your property when you're selling the same product? And I explored different avenues, whether it was theming, whether it was offering, whether it was loyalty, whether it was amenities or design. And that formed the basis of my thesis and thinking. And I bring that into most of my consulting today, whether that is in hospitality consulting or in traditional retail development, because a lot of the stuff that we saw in casinos and that smart thinking 20 years ago is now applicable to other asset classes. So that's what I do.
Well, thank you. And that's what you do, and you do well. So I definitely appreciate you taking the time to speak to myself and the audience today. And of course, there's a topic that's sort of on everyone's mind nowadays. It's the topic of, COVID. So I want to sort of ask you, how has that impacted the industry? Because right now we're having to, we have a lot of office space that's empty. And now hospitality is definitely taking a toll. And it's taking a toll on hospitality. But of course, two markets that I know are, you and I are in markets that have been significantly impacted. I'm in the Orlando area with Disney. Social distancing is definitely not, not helping. And of course, so tell me a little bit about the hospitality industry from your end and how that's been affected.
So I've just spent the last 2 months researching and writing a pretty big academic piece, which will go live in about 2 weeks' time, which you'll be able to download from my website, or a link from my website, which I'm sure Sendra will provide, looking at the history of Las Vegas and how it's dealt with past recessions and crises, and how we move forward in a post-COVID environment. And there are two things which I can answer that question. Number one, the first place to start is the customers, and the second place to start is the assets, the real estate. And if you believe that the strategic assets within the hospitality industry are the customers, I would agree with that. And within the sample, you find three types of customers. The first set of customers are, we are going to come to Las Vegas and nothing's going to stop us. We don't really care about COVID. Our life will continue regardless. And that's about 50% of the market, of the leisure market.
Interesting.
Then you have about 30% of the leisure market, which says we are prepared to come, but we expect a degree of caution in not just our behavior, but from the other people's behavior that are coming to this market. And again, about 15-20% who say, we're just not coming, we're staying indoors. We're not, we're not going to Las Vegas, not because it's Las Vegas, just because we're not going anywhere. And that's kind of where the market sits. So within Las Vegas, you're looking at it from a leisure point of view, reasonably busy at weekends, but also reasonably quiet during the week. And that's a structural problem for Las Vegas, because the real secret to the city here was, and still is, if you take away gambling, Las Vegas would be okay. If you took away conventions, Las Vegas would have a problem. And the reality is there are no conventions planned, within the immediate couple of months, certainly until next year. So that gives the market a problem, because you don't build $4 billion, $1 billion resorts for 2 days in the week. You build them for 7 days in the week. So the first part of the answer is, how do you manage your customer and get your customer to come? So if you are wanting to cater for that 50% of the market, that's great, and you'll do very well. Or you then got another 20% or 30% of the market, and you consider that's about 12 or 15 million customers a year. So it's not unsubstantial, who are prepared to come, but under the right environment. And if you break down that demographic, they tend to be more affluent and older. So your potential, by not taking on the concerns of those customers and alienating them, you're not engaging with perhaps one of your most profitable segments. And then your third part, your people who are not coming, they will come on the basis that there is a vaccine or a treatment to the virus, and that is taken into consideration when putting the offering together. So that is the customer. The next part is the assets themselves. And this is where we have more of a problem, because casinos and Las Vegas was not built for social distancing.
Of course not.
Convention centers, nightclubs, bars, restaurants, casinos, gaming, getting as many people together in a relatively small space as possible and feeding off that energy, getting people, to have a really good time.
Sure.
And forgetting about what's going on in the rest of the world. That sense of escapism is something very difficult to do when you have to take on board, safety and health considerations within your customers. So we have the casinos themselves have started to take steps to limit who comes in and out the building at peak times. Restaurants are socially distanced. As you know, Las Vegas was shut down with the rest of the US. And when it reopened again, there was lots of plexiglass and obviously, when bars have been shut without serving food, that meant people can't drink alcohol. So it's affected the business model and the revenue model of the properties. And fundamentally, of course, you have the convention problem, which
Sure.
is a property like, for example, it was reported yesterday in the news that Las Vegas Sands is looking at a potential exit for the Venetian and Palazzo properties in Las Vegas for
Really?
$6 billion. And that business model is predicated on conventions. They have one of the largest privately owned convention centers in North America. And if you can't fill those 7,500 rooms Monday to Friday, it's very challenging for the revenue model.
So what do you think is going to come from that? Are they going to repurpose? I mean, because that's a significant investor to try to exit. So what do you see for a buyer to come in? Are they going to have a vision of repurposing that building or restructuring? How do you see that unfolding?
Well, I'm not sure you can do anything else with it other than, manage it accordingly to meet the short or medium term needs of the market. What I think is where I think this will end up is something which Caesars and MGM resorts have done over the last 4 or 5 years or so, which is to spin off their real estate assets into REITs. So previously, if you go back to 2015, the gaming companies held all their assets on balance sheet. And I think it was started with Penn and then moved to Caesars and MGM, is that MGM Growth Properties was set up as a REIT for the favorable tax structure that a REIT has compared to a traditional company, and bought the assets of the gaming companies. Likewise, when Caesars came out of bankruptcy and restructuring, set up Vici, which is an independent REIT, which owns many of the assets that are operated by the gaming company. Now, because MGM, Caesars, Penn, and others are diversified gaming companies across the US holding assets in different markets, it's much easier to novate those assets over into a REIT. Whereas if you're someone like Las Vegas Sands or Wynn Resorts, for example, who are based out of a relatively small number of very expensive assets, it's not as easy to divest of your core assets as it were if you were a REIT. So it may very well be that a large REIT does come in and take over the ownership of the US assets, with Las Vegas Sands having an asset light response over here. So they're driving a management fee and revenue and paying rent. The way that MGM and Caesars have done it, but maybe they're looking to exit to another party. But I think
So
fundamentally,
this is going to redefine the real estate market as far as who the owners are, and and how they expand, because it's interesting as you speak about certain big players who've gone into REITs, and so I guess they're trying to hedge their bet because there's so much uncertainty right now. I mean, I did my dissertation on real assets, to hedge your, if I can remember the title, it seems so long ago, it wasn't that so long ago, but I still have nightmares about it, but yes, I wrote my paper
it was a while
on,
ago.
yes, to how to hedge your portfolio, how to protect your portfolio during a crisis. And this is exactly it, because I was referring to the 2008 crisis. Real estate, no matter what, is still going to be a sure bet because it's a tangible asset. But now it's interesting how real estate is being affected in a very different way. Commercial real estate, I should say. But even when you think about what do you call it, the residential space now. The residential space, I was reading just recently how people, when they're shopping for homes, they need more room, because now we're looking at more, whereas the office space, the commercial office space is shrinking, but now you have people demanding more room because they now have to have a home office. Where I'm working, besides of this beautiful background, definitely there is a beautiful room behind there. But it is something to take into consideration. So nowadays, and I could see how there could be a correlation between people working from home and actually wanting to run away to stay at a hotel. So that could work out as an advantage for the hospitality industry. What do you think about that?
Yeah, that's an incentive that MGM have done. Work from home, and they've partnered with some airlines. You can go and stay in a hotel room and get a change of scenery, and eat in some of the restaurants, which is a good strategy. Um, what I will say is, based on the last 5 years, I've given up on forecasting anything and predicting anything. But what I will say about the real estate market, both in the UK and the US, is that there are certain things that have happened that have made the market robust. Number one is low interest rates. And as long as interest rates remain low, then the real estate market will remain uh, solid,
Hmm.
secure. But the second issue you have is, where does that income come when you hold on to real estate? So traditionally, that has been a rental model. And what attracted me to the casino industry originally is to research it was because there was no fixed income related to a casino. So if you owned a shopping mall, you knew where your money was coming from at the end of every month. You knew who was going to pay your rent. You know, as long as the customers were coming in and going to the retailers were paying you either a percentage of the revenue or, you know, a fixed lease, and the rental income was coming in. Whereas in a casino, a customer could come in, win, and leave, and you've
Sure.
gone. It was very difficult to understand, you know, or to model theoretically your monthly revenue. So that was some of the stuff that got me interested in that, and how you modeled that and valued it in the first place. The reality is, even if you bought or were invested in a traditional REIT or shopping mall or real estate,
Hmm.
what is the security of your income? And the dust, I believe, has yet to settle on this phase. There was a report earlier this week, or maybe last week, that, you know, Gap and Banana Republic are looking to move out of malls, which is a huge, you know, blow to the rent roll within,
Absolutely.
particularly regional malls. And again, if you look at the fashion retailers that have been the staple in every major city over the last 15, 20 years, their position in the market is diminishing. So what you're seeing now is an acceleration of the decline of retail, partly because of the internet, you know, and
Sure. Of course,
people.
let's just be specific, partly because of Amazon.
Well, yeah, but also online, just any form of online retail. But, you know, customers' behaviors change, and you don't necessarily want to go to a mall for 2 hours where you make a purchase, you know, 11 o'clock at night.
Sure.
Um, so that is a fundamental challenge to the real estate, to the commercial real estate industry.
Absolutely.
That said, there have been interesting um, shifts in the model by the likes of Simon Real Estate, which is the largest retail REIT, where they have invested or co-invested in some of their distressed retailers. So taking stakes in the likes of River 21 and Brooks Brothers to support those retailers within the malls, so they can share in the upside as well as, you know, keep those malls active. But
Absolutely.
uh, but you know, one of the other things I've been looking at over the course of the last, you know, oh gosh, about 12 months now, is how do you take that vertical model that existed within a casino into a non-gaming asset, into a shopping mall. So
Hmm.
what do I mean by that? So up until the last, you know, couple of years, with a few exceptions, if you went into a casino or a hotel in any market, with the exception of the likes of, you know, some of the places where they bring in third party food and beverage, everything is
Hmm.
operated by the hotel. So the hotel operator operates everything from the coffee shop to room service to the high end restaurants to, you know, the valet parking. Everything is operated in a vertical model. Whereas if you look at a shopping mall, for example, that is horizontal. That is the retailer, the real estate company provides the boxes, and third party operators come in and operate and pay rent. And I think one of the ways that the commercial real estate market is going to go is certainly that the operators, you know, co-invest or have interests within the retailers that are in there, where the rent, you know, base rent, leases rent, declines as a proportion of overall income,
Hmm.
and, you know, performance is rewarded disproportionately to the landlord in a way that it hasn't done before. Um, and I'm looking at some of the deals that are going on in the markets, both in the UK and in the US, in terms of lease
Hmm.
restructuring. That is something that is becoming very evident. So where traditionally those of us in the real estate investment market would say, buy into your REITs because you know that the rent is coming in every month and they won't go up and they won't go down dramatically, but the rent and the income is going to be stable. Now, what we're seeing is maybe a decline in base rental income, but the upside on the performance of those assets will be reflected in the income in a way that hasn't
Indeed,
necessarily been seen before.
indeed. I mean, it's going to absolutely transform the industry. And have you looked at places like, Dubai and Monaco that are big also that compare to Las Vegas as far as gambling and hospitality? Have you compared those markets?
So Dubai and Macau are the other two major markets that have learned a lot from Las Vegas, and to a degree Singapore as well, because
Hmm.
without Las Vegas, those markets would have grown very, very differently in terms of the offering. There's an awful lot of similarities in terms of architecture, design, operations. Uh,
Sure.
that sprung out of Las Vegas. You remember, this was one of the very few places in the world where a hotel that has under 1,000 rooms is treated as
Right.
boutique. You're right. I think there may be two or three hotels in the strip that have under 1,000 rooms in them, with the average about 3,000.
Wow.
So it's you can't just wake up one morning and try and operate a 3,000 room hotel or design one. There's been the city has that discipline has evolved within this city and has then subsequently been exported to other markets.
Hmm.
So we're seeing a lot of crossover. For example, if a restaurant or an operator does very well in Las Vegas, they will export to Dubai and Macau. Like,
Hmm.
like say, we'll go back to Las Vegas Sands with the Venetian. Of course, they operate
Hmm.
Marina Bay Sands
Sure.
and several properties in Macau. And
Sure.
there's no way that they would have been able to enter those markets if they hadn't had the operational development expertise that they had here. When it comes to things like food and beverage, I know that there are some of the leading Dubai-based restaurants that are looking to come to Las Vegas for licensing. And also there are operators that exist in Singapore and Macau that also exist in Las Vegas as well. So you've kind of got those big markets and these big assets that operate in a relatively similar way.
Hmm.
In many ways, if you went back 30 years or maybe more, 40 years, you saw that Las Vegas' biggest competitors were like Atlantic City for
Sure.
gaming revenue, whereas the competitor cities now to Las Vegas are Orlando when it comes to conventions, or the
Sure.
likes of Austin, Texas, or
Interesting.
Chicago for conventions, places where they're cool, nightlife, food and beverage, where you got to
Yeah,
go for
pretty
that weekend.
cosmopolitan.
Correct. And for the gaming customer, for that high-end leisure customer, they're looking at uh, here, maybe parts of LA, parts of New York, or Paris, or London, for where they go to spend the weekend. What's also interesting is the other customer which has become more prevalent in the last 15, 20 years is gaming customers, mainly
Hmm.
from Asia. And those customers have a choice to come to Macau, Singapore, one of the regions in Asia where they have gaming, maybe in Korea or Cambodia, or to come to Las Vegas. And the gaming revenue, the gaming taxes in Las Vegas are substantially lower than the Asian customers. So in many cases, it is more profitable for the operator to take, for example, a large Asian customer, fly them to the US, where they can gamble on a lower tax basis, and then fly that customer back to Asia again. That
So
is something which we
these
have
are
seen.
what you're referring to are the high rollers that they cater. They have sort of special protocols for them.
Correct. So if you look at the value of that type of customer in the year 2000, the value of that customer to the casino was about $600 million of net winnings from that customer. And then if you go to, I think it was 2013, you're over 1.5, 1.4, $1.5 billion in terms of revenue from that type of customer. So you can see the attraction of why it makes sense to take that customer and bring them to the other side of the world to play
So
rather
I
than locally.
do. But in the day of COVID, have you taken any sort of collected some data from today versus a year ago as
Sure.
to
So
how those
so
numbers
they,
differ?
so therein you have a problem because that customer cannot travel.
Right.
Okay, so what you see, for example, is in terms of the customers that used to come to Las Vegas, the convention customer would come and spend approximately $1,000 per trip, or the international customer would come for longer and spend, a slightly larger amount of money, versus the drive customer, which spends maybe between $500 and $600 per person per trip. So the revenue that is obtained per customer is greatly diminished compared to what the traditional markets were. Now, here is the question from an investment point of view. Whether you want to invest in the assets, invest in the REITs, or invest in some of the associated operating businesses that exist here. What is going to happen next? Right? So on one level, even at a 50% occupancy rate, where traditionally Las Vegas revolves on an average about 90%, but even on an average of a 50%, that's still, looking at 120,000, sorry, about 120,000 customers, 150,000 rooms in Las Vegas, and if you base it on 1.5 customers per room at 50%, you're still talking at about 110, 120,000 people visiting Las Vegas at any given time at 50% occupancy. That's a pretty big number of guests to have here. You're still talking at about 5% of the population of the city is transient every 3 or 4 days.
Absolutely.
The problem you have is the events that they usually took part in, whether that be live entertainment,
sure,
food and beverage, they are restricted in terms of revenue potential. And the question was,
are you able to get any secure any live appearances for people like Celine Dion? I mean, I've been out of that. Actually, never been to Las Vegas, and I think I don't know. I think I would probably lose myself. So I've sort of contained myself in, But anyway, people, Celine Dion. There are quite a few other stars that were the usual suspect when you think Vegas. So, are you even able to have these bookings in the day of COVID?
Well, there are two factors. Number one is no, that the occupancy levels at the live events are restricted to the extent it's not profitable to bring in a performer on that level. The second thing is the Raiders, which I believe are a US football team of some note that used to play in Oakland. You're asking the I'm I can talk about football with a ball at your feet, but the thing that you throw, I haven't got a clue. But the Raiders have played their first home game in the new Allegiant Stadium, a $1.5 billion stadium that was opened in September with no fans. So that is a factor, that we have this large facility. And the third thing is, in terms of doing large-scale outdoor events, the shootings that took place on
exactly, I was going to bring that up.
1st, 2007.
It's so fresh. It's like, what, 3 years old? It's only 3 years old, correct?
Yeah, 3 years old, correct. So any large outdoor festival-style event that was done has been, the large strip operators have been much more reticent about putting events like that on. That said, Life is Beautiful Festival downtown is still, was cancelled this year, but was still planned. But it was that particular type of event. I think the large operators have been much more reticent about putting on that type of event.
So, so we know where we were. We know where we are now, and because we're still on sort of unraveling that story of the current situation. So, how are you in this present day? How are you comparing to the rest of the city? I know, keeping aside the your industry, as far as Vegas itself in comparison to the other cities in the U.S. New York was a big, moneymaker. We have L.A. Miami. How do you compare in bouncing back?
So there are two things to note. The first of which is I was in LA just the weekend just passed.
Okay.
And LA was dead.
Empty, of course.
In a way that Las Vegas isn't. So there are still people coming here. And I was told by a retailer here that sales in the luxury goods stores are year on year up significantly between this time last year and this year. Yes, for sure. And the reason for that is, I think, and this is my hypothesis, if you are financially secure or affluent and you want to get away and maybe go shopping somewhere, you're not going to LA. and you're not going to New York, and you're not going to Miami. At this time of year, you're certainly not going to Chicago. So where are you going to go? And the answer is you can still come to Las Vegas safely and have a good experience in a great hotel. You can go shopping. You can have, really good food. You can still live some kind of life, albeit cautiously. And Las Vegas, is open.
It is.
Uh,
So I mean we're gonna have to touch on politics, and I
sure.
know as we've talked before the show, I'm quite well versed in it, and I have strong opinions. And those of you who are watching today who have watched my other episodes will say a little too opinionated sometimes, but here we are. But so we have elections next week. Are those is that event factored into your how can I say projections or your future, the envisioning of how to restructure the or when you think about the market, is that something you take into to consideration? Which party wins, or does it not matter at all in Las Vegas?
Right. So, first of all, I'm not going to wade into US politics with my accent, right? As you know, um, nobody likes to hear a foreigner tell the Americans what they should or should
Well,
not do or how they
technically, I'm
should
a
or should
foreigner
not vote.
too. I'm a
Yeah,
foreigner. I've been a foreigner everywhere I've gone, so that never stopped me. But just go ahead.
but you have an accent which is much more amenable than mine. Nobody likes the British telling the Americans what they should be doing. So I will say this. Um, the there needs to be some decisive action taken one way or other in terms of how to resolve the COVID situation. And whether that is, you know, Las Vegas did terribly badly when the place was locked down because obviously nobody's coming to visit. But at the same time, nobody wants a Las Vegas where you can't come here in case your entire workforce gets sick during a convention. So whatever way that America chooses to vote, there has to be some kind of decisive resolution. Because for as long as there is a risk that people can get infected and die because of this virus, people will not be able to fully go back to the practices that they had before. And I hope that's not, I hope I've left myself relatively vague in
It's
terms of.
okay. This is
Uh,
this is me. You are in good company. They give me a pass all the time. I get away with so much because remember, when I was in business school, I'd give these opinions. They say, well, I would say today I'm Haitian, today I'm American. They're like, we can't keep up with you. So I always have an excuse as to why I'm giving the opinion. So you could just say, but I have opinions about the UK as well. We could touch a little bit about that and how the market, because London, where you and I have spent time, my goodness, the commercial market, because people go to London to shop.
it, the UK's to an extent is I would give the same answer. You have to decide on a strategy and keep that strategy. Are you open? Are you closed? So, for example, in the UK, as we both know, the government shut everything down, told everybody to stay indoors, and the minute the virus calmed down, they subsidised everybody to eat in restaurants, and people got COVID. I mean, it's absurd, right? So, you either have to you have to say there's a strategy which is going to contain, or there's a strategy that is going to allow people to go out, but you can't
You
hop
can't
around from
wishy-wash.
one.
You can't wobble.
you
No,
know
definitely. I'm just glad I'm
and
here. I'm so glad. And I always say during the show that my heart goes out to those people who have gone through a difficult time during COVID, who have lost loved ones. Because, and my conversation about COVID is not to diminish the experience, but to try to understand, really, to clarify as we navigate the business world, because both you and I are still trying to go through this in a sensible way, and while we respect government policy. And I have to say that I cannot wait for the election to be over, because at least that will be a little bit of clarity as far as the policy, because right now everything is being politicized, so we don't know which are the facts or which are just hype because of like they want to win. So I definitely want to go back to the days where you can actually trust the data that's coming. So how do you actually discern with the information that's coming through, whether it's CNBC, whether it is Fox News, because everything is so tied in right now to the politics.
In terms of how I consume news, I still read the British newspapers every day, which I and the US newspapers out here are interesting, but much more localized, certainly in southern Nevada. And I've really started to enjoy the new show on CNBC with Shepard Smith. Is that his
Oh, he's
name?
on CNBC now.
He's
He
he's,
used to be on. He used to be on Fox News. I
he's
did not know. Oh my goodness, I'll have to look into it. But
so
there's so yeah, there are quite a few resources, and I'm not here to promote any one of them. I'm hoping
sure.
that you're all addicted to Sendra TV, because that's the only news source. But we don't fact check, so that's why we bring you the experts. So I want you to talk to me a bit more about why you're so because this is a sector that's taking such a brutal hit. It's taking a hit in 2008, it's taking a hit now. I mean, we're having to think about, I understand in Germany they're turning all um, retail operations, not retail operations, I'm sorry, malls into warehouses, so
I'm not a fan. I'm not a fan of that. I think you're just strong assets to a large extent. I still believe there's something very human about the desire to be with other people, and I
absolutely.
and I think that will not lose even with the generation that are spend their life engaged on their smartphone. I still think there is something very human about that analog experience, and the reality is the current retail operators are not offering the customers the experience that they want. And one of the things that we have learned in Las Vegas is there's no reason for anybody to come here, right? You can gamble in, whatever it is, 20 something states in North America. You can play games and slot games on your cell phones, right? You don't have to get on a plane for 3 hours, get off, deal with the heat, because what we do in Las Vegas, you can do in more or less other places. Get 40
But it
million
doesn't
people.
stay in those other places. In Vegas, what goes on in Vegas stays in Vegas, right?
Not for those of us that live here. And the the reality is, people, although we are moving in towards a digital world, we
Hmm.
love analog experiences. We love somebody to say good morning to us. In the olden days, to shake us by the hand, to give us a smile when they're talking to us. And that hospitality is something which people want to do. And one of the things which I've been working on over the last 7 or 8 months with a group of people is how do we take that hospitality experience again into a retail environment or into a commercial environment that isn't necessarily Las Vegas. And I think the future of retail is not the way that it was, but I do think it has a much still got a very important part in communal life and culture of people going out somewhere to do something. Now,
Right.
COVID is, like I said before, COVID has accelerated that decline within traditional retailers. But also, I also think when we come out of this, there will be fabulous new, whether it be retailers that started online or are offering unique experiences to customers to sit down and watch sports together. We want to do things with other people. We love doing things with other people. The neighborhood
That's the way
bars.
the human was created. It has to be. We weren't born alone. We definitely have, our senses depend on interaction. And they've even said, there are some researchers that have said that, we are not working toward progress when we're isolating each other. We're isolating from each other. As a matter of fact, it is our immune system depends on human interaction.
Well,
And I'm not a researcher. I'm just reading you the headlines. That's all.
no, you're right, and I can tell you both anecdotally, and and from my own point of view and talking to others, is the thing that I've missed the most during the lockdown is going around to the local bar and watching the games with the people in the bar and having a beer and having a chat. And that's the same in the UK, where we wanted to open the pubs up first of all because of the social cost of people not getting together at that central place. So it's not because you can't drink a beer and watch a game in your house, but you prefer to do it with other people, and that would
Absolutely.
exist. That would exist. So how do we then take the next generation of customers who are, you know, currently teenagers and work out what they want to do in their spare time that isn't, walking around a Macy's. What is it
Absolutely.
what is it they want to do, and how do we get them out? Because people want to get out the house
People do.
even
Absolutely.
more now than ever before. But the options that they have to go to are not enticing to what those customer needs are. And so going back to the very, very beginning when we started,
Hmm.
with my crazy background from real estate development and social sciences and strategic marketing and investment development, what I've tried to do is to synthesize what I know about people and what I know about marketing into what I know about real estate. And the assets that I've worked in, I think, are perhaps the best examples of where that has been done successfully.
So it's interesting because when we think about retail, I mean, there is a reason why it's called retail therapy, because I know I have been I'm recovering shopaholic. What my years have made me wiser. But there was a time, I mean, it wasn't because I needed to do anything specifically at the mall, but just browsing and just seeing other people. It's kind of like an energy, an energetic process, when you're interacting and moving about. And for some people, it's actually exercise, to walk around. But go ahead, you would say something.
It's about an emotional response to an activity or an environment. Okay, now let me distill this for a second, and I'm sure you never people have to think about it this way. When the 43 million people come to Las Vegas or going to shopping malls, they're going somewhere to spend money. In Las Vegas, you come to play games of negative expectation, where if you rationalize it, the more you play, the more chances you have of losing. And yet people
Yeah.
come and they come back. That is not rational behavior. If you sat with an economist and had this conversation, they would say it's irrational, the city would not exist. Well, it does. And people love coming. Why? Because what we give our customers, if we do it well, is an emotional response to the environment that they are in. We make them feel good,
Yes,
right?
it's
Uh,
feel good therapy.
Okay.
Absolutely.
And a good retailer will make the customer feel good about that purchase. And that purchase, if it's fashion, will make them feel good when they wear it. A,
Absolutely.
a, a good discount retailer will make that customer feel good that they have received a discount or value when buying that product. A bad retailer will do neither. And I think
Absolutely.
that, and I think the reality is that there's an awful lot of bad retailers out there that haven't necessarily identified the emotional drivers of what that customer wants, or what that next generation of customer wants.
Absolutely. And on that topic of next generation, because I know you've done quite a bit of research on millennial patterns of behaving. So let's touch a little bit about that. And so, how do you see the shift from the baby boomers to the millennials, and how, what's going to happen to some of these, sectors as a result of their change in behaving? Like now they're, I feel they're more hurting. They're more of hurting group because of social media. They're all connected. They're influencers. I stayed at this hotel. That's one way of them getting the word out about certain. They take selfies, at certain locations. So talk to me a little bit about what the differences between the previous generation and your millennials. So I figured I'll lump you in the next
To
generation.
me,
Yeah,
yeah,
aren't you?
I may look like a millennial. And I
You're
wish I were you.
you're in that cuss. I look, I look at you as having, like, I don't know. I just remember you being so carefree. I think I was a little bit too serious when I was in business school, but
Boyish fat cheeks.
it's the
I'm very
boyish though. It's the boyish. So talk to me about those two groups, between the baby boomers that were very much more loyal to home, whereas the millennials, they're not, they don't have any loyalty really.
um. They have loyalty, uh, but it's a different kind of loyalty.
Hmm.
Um, and a different type. Well, I call it expectation inflation, right? That whereas anyone who remembers, you know, the 80s remembers things didn't always work out well, but you found a
Hmm.
way to get around and to make things happen. With this generation, expect things to happen. There's a sense of expectation that exists whether you are buying something or going to a property or whatever your experience is that you are consuming. There's an expectation that it will deliver. Whereas I think previous generations were a little bit more laissez-faire in terms of, you know, oh, well, they've tried their best. Let's, you
They
know,
were more polite.
let's make do. We're correct to an extent. Um, I think they are much more. They're certainly much more driven on experiences than
Hmm.
material possessions. And again, it goes back to that emotional reaction to the environment that they're in. You know, I can tell you that, I've two teenage kids. They don't collect anything. They don't collect a thing. Whereas I remember when I was their age, I had CDs, I had trainers, I had, we were collectors of material possessions.
Sure.
These kids don't collect anything. They want to listen to music, it's here. Every
Right.
song ever recorded is on their phone. Why the hell would you need
Absolutely.
a CD? In fact, my daughter said to me, "Can I have your CDs, Daddy?" I said, "Oh, fantastic! Do you want to listen to them?" She goes, "No, I want them for my wall for decoration." I said, you want the artwork? You want the covers for your walls? She went, "No, I just want the discs inside, the shiny things." And it
So
was
it's that's interesting. So what's sentimental to you is just a prop to them. Isn't that interesting? So I think it's because of that they have a sense of more unlimitedness because we held on to things because we felt like there was a finite a way about this thing because we collected it because we felt like it was irreplaceable. Whereas them, they have so many different ways of getting things, i.e., smartphones, smart devices, so maybe that they've grown, they have a larger sense of life than the previous generation.
yeah. I think also. I mean, again, growing up in Scotland, which was the far corner of civilization in Europe, we defined ourselves by what we had.
Hmm.
And the music that we liked and the brands that we associated with, and we were certainly far more parochial than the globalized brands that exist today.
Hmm.
And whereas this generation of kids don't define themselves by what they have, they define themselves by what they do, and whether those
Interesting.
forms of experiences, whether they're climbing a mountain over the weekend or whether they're going on vacation to XYZ, and then they're taking that photograph of that concert when they were concerts or that backdrop, which forms the narration of whatever their identity is. I think in a way that we didn't necessarily do as Gen X or Gen Y.
Sure. So how is the real estate commercial hospitality industry incorporating that? Because they are the next customers that they should be targeting.
So some are doing it well and some are doing it not so well. Because if you are swimming in a sea of sameness, then there's no photograph to be had.
Mm,
Whereas if you're creating a unique experience with art and with a customer journey, you can take that photograph and that makes that place desirable. It can be the likes of Meow Wolf in Santa Fe, New Mexico, which was an art collective, which is now a phenomenally interesting box with one opening in Las Vegas and another, I think, in Colorado at some point in the next couple of years. Uh, you look at um, Seven Magic Mountains, which exists in the road between LA and Las Vegas. It's an art installation in the middle of the desert. You click on it, you'll see hundreds of thousands of people who stopped in their car to take some pictures by this art installation, which is
hmm.
set back from the road. This weekend, I was at Secret Cinema, the launch of Stranger Things in a joint venture with Secret Cinema and Netflix in LA when I was there. And again, they don't allow your camera to be used, but there are plenty of people either on the way in or the way out taking that photograph. So the experience you can be reflected in the photograph on the way in or the way out, but it's something which you go through as customers. And I think something like that will transform how content is consumed by the next
Sure.
generation. So whereas, and I really fear for this, whether the cinema experience is going to be the same post-COVID as it was pre-COVID.
Never will be. It never will be. What was this big chain? There's a big chain that actually went bankrupt, isn't it? It's not AMC. I think it's another one.
I think Regency said they were going to close many of their units down until
Yes.
COVID has passed.
So first of all, I hadn't been to the cinema in so long, but it doesn't affect me. But in those young, in my younger years, I so look forward. But now, we have to think about health as well when it comes about, so, we talk about COVID, and now we're social distancing and how we are, we are social animals. The mall, the hotels, the gambling places allowed us to interact with one another. Sometimes a little bit too drunk, sometimes not. When it comes to the gambling scene. But again, it was definitely helping us to, stay strong and have, and build our immune system. So now, if we don't have these group experiences, that's going to be a significant factor moving forward, health wise.
We have.
Because,
You,
go ahead.
no, I was going to say you're absolutely right. I was nodding and agree with you, but I don't believe that we are going to say that's now the end of group experiences, Sendra. I still think there's a human desire to be in the crowd again.
Okay.
To go out with our friends, to go to. The question is, how do we develop them? How do we, create the environments that people want to go to, whether they're outdoors for the short to medium term, or then come back indoors again. And I still think that there's a large amount of people. The research shows 50% of people that they will do stuff if
Absolutely.
they have
I'm
to
one
wear a
of those
face mask.
people.
Yeah,
I mean, I choose, first of all, I love being around people, being outdoors, traveling. The thing is, I have a problem with the mask. And so I tell the retailers, I said, I'm allergic to the mask. And so this is because I have trouble breathing in certain places. And they said, I'm sorry, you have to. And then that's how I'm choosing my retailers nowadays. If you force me to wear a mask, I'm sorry, I can't, because I can't breathe. You don't want me to have an attack while I'm in your store. So that's one thing. But for me, I do believe, we are resilient, and we're going to have to reinvent how we do things. But when I think about London, and one of the pleasures that I have in London is going to, King's Road, and shopping, and just going from boutique to boutique. Now you have to social distance. You can't be in crowds, and even though it's outdoors, you cannot be. And also keeping in mind that you have a capacity requirement, which means not many people can be in a store at the same time. Because I speak London, because London is one of the strictest, COVID, has the strictest rule because, of Sadiq Khan. And I will keep politics out of this. But that said, for me, that was one of the pleasures that I had, going back to London and walking the streets and shopping. And because in London, you don't have the big malls that you have here, that you can sort of prevent the social, you can apply social distancing. But London is someplace, even if you're not shopping, you still, the tube, subway stations, my God. Do you think about those at all? The fact that, as we have people who live in cities that do not have, that are pedestrian friendly, that's going to be a challenge. LA is not necessarily pedestrian friendly, but you have New York, you have Chicago, places where people have to be in subways. So you're losing the traffic of the subway from people from stores in hotels that were near subways. How is that fitting into? I'm saying all that. I'm trying to sort of, articulate it in a way that you can understand where my mind is going. But again, those cities that don't necessarily where you don't need a car, but then now people are afraid to get in the subway because of the close proximity. What are your thoughts about that?
I think I'm going to answer that question in rather a peculiar way. It's going to sound like a politician's answer, right? But I'm going to give you different answers, not to the question you asked, because it's the same thinking. First of all, yes, there are challenges within how we plan cities and whether people work in the office, and the knock-on effect to the retailers and things that exist around those major population centres. I don't, I escaped a major population center. I lived in London for 15 years. I was there in February, the last week in February, just before they banned the flights, and I was on the underground, wasn't wearing a mask, in busy places, didn't think twice about it. Because I think when you're living in those major population centers, there is a rat race and you behave in a particular way. From an asset point of view, in the hospitality sector, there are two questions. Number one is this going to be the end of large-scale business travel? Number one, and how does that affect the real estate and the assets that are there? And the second question I'm going to ask is, I'd like to answer a question by giving another question, which I'll then answer. Is what is the definition of a luxury experience? Now, is a luxury experience something that was wood or gold, very opulence, or is a luxury experience something much more solitary and secure and safe in moving forward? So this is the question that we ask in the hospitality space, or I would ask from a real estate point of view in the hospitality space. If my hotel is in central London and I have a very, very strict protocol with regards to health and safety and COVID, whether that is filtering, air conditioning filters, and social distancing, and testing all the guests when they come in, and putting the prices up rather than down, am I more likely to have a successful business than having everyone open and trying to fill it 100% occupancy on a lower rate? And the viability of these businesses within the environment going forward, I think, is related to the strategic position that they adopt vis-a-vis COVID. So, would you go on the underground if it's packed at 7:30 in the morning, or would you go if it was staggered and you could have a cleaner experience, or the office was cleaner and socially distanced? So it depends on what you do within the four walls that make these businesses viable.
Absolutely. And the cities like London, cities like New York are going to have to rethink, even though everybody's fleeing New York. So I was reading an article today that everyone's moving to the Hamptons, and to have a more suburban experience. And you're having to reshape. People are having to reshape their thinking. I've been grateful that I've had a bicontinent lifestyle for quite some time. I always tell people I have options. I have options. But for those people who do not have options and who are like, you can go back to London if something would occur in Vegas. But for those people who are forced to are committed to that type of lifestyle, but I guess I'm trying to wrap my mind around the changes. I'm trying to process everything that's happening and trying to predict the future, because I think maybe I'm trying to build security in my own mind of what's to come. But from a real estate standpoint, I know that a lot of those tube stations as well, depend on, so they can't exist if people are not using the tube, the subway. Those are the transportation. That transportation system is going to have to go away, and that's another opportunity to repurpose. And so I guess, Oliver, I'm just trying. I'm realizing as you're speaking, and I'm processing and I'm absorbing the information you're giving me. I haven't thought about a lot of this, and you're giving me a lot of food for thought. So I want to, we've talked a bit about pretty much every area that we could think about within the real estate section in investing. So I want you to talk to me about the five most, the key points of right now, the real estate hospitality in the day of COVID. If you can summarize for me, 5 key things.
Yeah. So the first of which is always the same, location. And you and I both live in southern states, and I think there is going to be a general move from north to south within the US, population-wise, demographically. People want to, get outside. Look at what's happening in terms of the demographic changes in Southern California and Texas, for example. So I think you've got a shift. So if I were investing into real estate, and real estate is a long-term investment, I would look south rather than north. So location is very important. The second, other than where is it, what is it? I think that with certain exceptions, the large assets are going to struggle. I think that major population centers and cities are going to have um, a longer recovery when it comes to getting customers back into your assets again, whether they be New York or LA. Are people more likely to stay in smaller boutique hotels rather than big hotels? So that's
Interesting.
the you're going to stay in a newer property rather than a landmark older property. I feel. The third thing is who's your customer, and it, if you look at the history of Las Vegas, Las Vegas has done very well in its periods where it's brought in more affluent, wealthy customers, international customers. And I think that if you're in a place in the long run that can attract a higher value customer, I think your business is more sustainable than a mass market product. The third of which is, both of which are, is experiential. How do you create the experience that makes you different from everyone else in the market? As I mentioned, Meow Wolf before, which is Santa Fe. People go to Santa Fe, New Mexico, to go to this experience. People go to Sedona in Arizona because of the experience that is there, because it's different to anywhere else. How do you create and capture uniqueness within what it is that you do? And that's really important strategically thinking about your business, whether it be any customer facing asset backed business. And the final thing I'd say is there are things, what we have learned in the last 5 years is you can forecast whatever you want. You've got no idea what is going to happen next.
Absolutely
If you
not.
had said to me in the UK that Brexit would happen, I would have said you're absolutely insane. Brexit's never going to happen. If you said to me when I was in the US that Hillary Clinton was going to lose the election and Donald Trump was going to win, I would have said, are you insane? Look at the polls. Donald Trump's never going to win the election over here. If you'd said to me 12 months ago, we'd all be sitting in our houses with face masks on, I said, why? Are you insane? Right? If you'd said to me the lights of Las Vegas would be turned off, the strip would be closed. These buildings don't have doors. Some of these casinos don't have physical doors. They are open spaces. They've not shut the doors in 60 years, yet they shut. So I've given up forecasting on anything.
Yes. So it's interesting. All this. Oh well, it seems like we should get a half partial refund at business school, because everything we learned in business school was from historical data, and at this point historical data is a moot point. So it's now we have to look at what we have right now and what we have to work with.
Well, they're historical lessons rather than
Yes, they
just
are.
the lessons of how we recovered are just as valid of what's going on now, because we're still in this great big gun. Somebody I was chatting to yesterday said it's like a Roadrunner cartoon, right? In one scenario, you're a Roadrunner where he runs across with the gully. He runs across the gully and he makes it to the other side. And then you have the coyote afterwards who runs across the gully, realizes there's no ground, and falls. We don't know yet if we're going to make it to the other side or
Of
if we're
course
going to
we are.
fall down. If we're going to fall down the ravine, right?
Absolutely.
And we just don't know.
We just don't
And
know. But what we do know is that we're still here, and that we're here for a reason, and we have to just keep going.
okay, so we are halfway. We are in the middle of the air at the moment, not knowing if we're going to make it to the other side or if we're going to go down. So some people are making precautions, of getting the
Yes.
mattresses down so we can land in them. Others are just looking straight forward, and what happens happens. And if that's the conclusion for where we are, that I'm happy with that one.
Well, I'm happy with that one too. And I want to say thank you to COVID, because I would have never thought about doing this, having this platform otherwise, because it's COVID that provided this sort of insight on how to restructure my business. And you and I probably would have not connected in such a sort of a urgent manner. And I think this was good. I so appreciate you coming and speaking with me today. And this is a S&P Global Pitch Investor Chat with Mr. Oliver Lovat from, I wanted to say Sedona. We talked so much about Sedona, from Las Vegas, Nevada. And of course, I'm not going to ask you about, the Vegas big event that happened 3 years ago. I definitely want to get some insight, but that's another topic for another day. So I hope you enjoyed. Did you have any, did you want to provide your contact details for the audience, your Twitter handle, Instagram, website?
Yeah, the best thing to do is my website, which is www.denstone-re.com. And then you can see a selection of my writings and publications up there. I don't really do Twitter because I'm more of a reader than a writer when it comes to that. But I'm more than happy. Anybody who comes to Las Vegas wants some information on what to see, where to go, please, feel free to reach out, drop me an email, and you can find it on my website, or my Twitter handle is Ollie Lovat, OLLYLOVAT, and you'll see my pretty picture.
Yes, a very pretty picture it is. And I so want to thank you for taking the time to speak to myself and the audience. This is the S&P Global Pitch Investor Chat, and I hope you will come back again. This was so enjoyable. Thank you so much for coming.
Thank you for inviting me, and I look forward to seeing you in Las Vegas.
Oh, definitely. I've never been. I hope to make it soon. In my regards to your family. Thanks again.
Thank you.
You're welcome. We thank you for joining us this evening. And as we come to a close of this event, we are thankful that you are part of this community. Leave us your comments below. Also subscribe, share, and like the videos. When you hit the bell, we will notify you when we have other events.